This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Joining us today is Darren Hazelwood, the CEO of Panther Metals, following news this morning that the company have raised £375,000 through a share placing at 4.5 pence. Well, thank you for your time. Darren, how are you?
Good morning, Mark. Thanks for having me on. Yeah, I'm good, thank you.
Good to speak to you. I want to first of all pick up on, this is a 12.6% discount. So how come you had to do a discount here? That's never really appreciated by the market.
I don't think you've seen any mid-price raises currently, Mark, in the market. I don't think you've seen them for a lot of years. I don't think in the current climate, 12.5% is an unreasonable discount. And yeah, that's very pleasing to get this away. It's something that was unexpected. I was approached towards the end of last week by with a substantial sum. And following review internally and where we're at, and the fact that I've already told the market that we're looking to accelerate the business now, and it felt that our following discussions with brokers, it's felt that it was a fair deal all round. Okay. Sort of certainly over the last, we haven't raised dilutive equity since August of 2022, so nearly 2 years ago now.
Yeah.
And in that time, I've been offered, I was actually doing the list this morning, I've been offered at 2.5p, 2.75, 3, 3.5 and 4p. And okay. I've batted every single one of those offers away because I didn't think that the timing, either the timing was right, the pricing was right, and a number of things. But as I say, the market's eased. We're going to work. You're going to see news flow over the next few days. It's BRNS reach. It's not inside. It's what people expected us to be doing. That was already funded. But now we're going to, the type of work that you'll see come out, it will deliver almost instant results. So now we're able to kick on those projects. Okay. And on that work program going forward without having the potential drag for dilution. And look, that's the industry, Mark. Everybody knows that, and yep. you have to make judgment calls in terms of where the market sees you at, and ultimately, this is where the market saw us at, and I just think it's dilution is never palatable. It's not something that anybody likes. Certainly myself. But also you have to be responsible to the shareholders and to the company. You have to see where you're at, you see where your assets are at, see what you're hearing from inside the industry, see what the industry wants to hear, what the industry needs to see to enable us to kick the business forward. And we have to be able to deliver that. And and we've got the assets that have been worth protecting over the last 2 years. But when you're in a market that's rewarding success, you then have to kick on, and that's exactly what we're doing.
Okay. So who were you approached by, Darren?
I can't, as with any of these things, Mike, you can't talk about individuals by name, but it's an investor in the sector, and and they've been in and around London for a number of years. Okay. And I guess the biggest disappointment here, Mark, is that it's a relatively small raise.
Well, exactly. That's a good point. It's a point I was going to come on. Relatively small, and you said there was quite a lot of interest. So why didn't you go for more?
Because the realities are that we've built some insurance policies into the business in terms of our ability to raise capital. So you're always working on your cash flow models and looking at where you're at, what you're going to do. And I've always said that when we raise money, you have to have a clear idea of what you're going to do with it. And does that have the ability to add value for everyone? And certainly the discussions we've been having, we're now into the field season in Canada as well. So that money can go directly into the ground. And the discussions we've been having just shows that this has the potential to be very useful in the development of the business. And look, the proof's always in the pudding. Greenfields explorers, non-cash generative. You have to raise capital to push the business on. And what you're there to do as a guardian. One thing you can't do is, as a Greenfields explorer, you can't control the market. You can't control sector sentiment. You can do your best to manage it. And what you're doing in those scenarios, you're managing that process within the realms of the tools you've been given. And hence us not going in earlier, not picking up capital earlier at lower levels. The market has decided what price we're at. But the market has also provided the capital to potentially kick us on as we look to accelerate through.
So you really look to raise when you need to and when appropriate, bearing in mind the factors about avoiding dilution, which I know is very important to you, and the way things are in the market.
Yeah, all of those have been at the forefront of my thinking since our last raise, which, as I say, was August 22.
Yeah,
you have to factor that in. I've always wanted to deliver a business that has the potential to deliver substantial upside from our initial investors all the way through. Now that's a challenge, and that's one that not many in the world in this sector would take on in terms of how sentiment driven it is. And certainly sentiment has been as brutal and as bad as anyone can ever remember. There's been a certain recovery in that, and we've taken advantage of that recovery, I suspect, in the very early stages. But you also need capital to be able to take you to the next level. You need capital to be able to do the work that also has the potential to satisfy people within the industry, and that's also part of this. Okay. You can't do nothing without capital.
Absolutely.
The biggest disappointment is the size of the people that we couldn't include in the raise. But that's just a pure reflection on the nature of the offer and how it's worked out, unfortunately. And that's never an easy one, when you've got to go back to really supportive shareholders and say, look, sorry you didn't even get a call, but this was done in almost an instant.
Yeah, and that's because you didn't want to raise any more than you needed to, really, to avoid that dilution.
At this point, yeah. And what we've got planned, what we've already got financed, and what the next stages are.
Okay.
Because we can continue the programs now. This is we've got a graphite area on Obonga that we've stated is 21 square kilometres. We've got graphite at surface. We've hit an intercept that made the top list in Q1 of 2024 for graphite intercepts globally, where we sneaked into the bottom there. That was a little bit unexpected, but our review of all the historical data, there are comments in geological reports in this area saying that graphite is abundant at surface, as one example. Now, we have to go there, and we've got to confirm that, because it's not just mentioned in one report. There are various reports that mention graphite. We've got to go there and prove that up. And our initial program would be on the ground, but we're able to advance that substantially now, which has got to be good for everyone. We're a Greenfields explorer. We're making rapid strides.
Well, you said that, you want instant results. And just listening back to our interview we did previously, when we talked about the extension of the permits there, both east and west, you said you sit in a perfect position for a graphite discovery of scale. And we talked about those initial steps of getting boots on the ground. You were waiting for the snow melt. You had your snow reports coming in. You did mention that early May for boots on the ground. I guess that hasn't quite happened yet, but when are we looking to get that initial action going?
Yeah, no, that hasn't, unfortunately. There's a really simple reason why I haven't broadcast this to market. But when I got there, and I've got the photographic evidence on my phone, unfortunately, when I got up to that area on the 30th of April, there's snow on the ground.
Right.
We were looking to kick off the program the following week. And you can't do with one of the programs there is, and you'll see more on this over the coming days, would be a drone survey over the VMS targets. And the second would be boots on the ground at Awkward, looking to confirm the historic reports on the graphite. Now you can't inspect rocks on the ground with snow on the ground, and you also you don't want to be flying a drone survey with wet snow on the ground sitting above. So the realities were that by the time we could bring the drone crew and the geological team that are coming out of Thunder Bay, by the time we could put those both back together with the required support, the earliest date was very early June, and we've done that, and we've pushed forward on that.
So a couple of weeks then. 3 weeks.
Yeah, no. You're looking. We're looking at the 3rd of June is the commencement date is of the program. So a week and a bit.
Right, and that's the boots on the ground. That's looking at that graphite at surface, really starting that initial mapping and target acquisition.
But now look, this has all come about relatively quickly. This raise, so we're now in the negotiations and the discussions on how we extend that work program as well.
Right,
because we're now not looking to stop.
Okay.
The market is rewarding success. We believe that we've got the assets to be successful. If we didn't, we wouldn't have been protecting these assets for the last few years from dilution at considerably lower levels.
Yeah. And I noticed from the RNS you mentioned it's a good time to top up the treasury based on your understanding, but also you say that news shortly, you said that the boots on the ground fairly soon in June there, and the program should provide fairly instant data, and this capital injection allows us to act on those results. So what could that indeed look like? Because this boots on the ground program is already funded, so the extra capital you've got, what could that look like following on from this initial boots on the ground?
I think the first point is that we're looking at an initial area of 21 square kilometres. We've got the proposal is for a team on the ground over a week.
Right.
They are not going to be able to inspect that entire area in a week.
Yeah.
It's an impossibility.
Yeah.
We've given them very specific targets, very specific locations.
Okay.
What we're now potentially able to do is extend that area. We are looking at other options that at this point would be mere speculation, so I don't want to sort of go into them directly, and that's not being smart. We need to have those discussions with our contractors, but it raises all kinds of options in terms of what we could potentially do and what we could potentially show. So
extending that program over the whole area, and then depending on what those results come back at, the next stage is now funded effectively, whatever that might look like.
It is, yeah. I don't want to speculate on that because we will know very early doors within this program if the historic data is correct.
Of the showings at surface, yeah, right, okay. And that's the objective, is it, to confirm that the historic showings at surface is correct?
They're correct. We can also extend the potential area now of the graphite, and that there are further options available to us that we're talking about pushing. So it has the ability to fundamentally change the offering in of the business. You've got to remember that only last week the Americans have introduced a 25% tariff on any graphite from China. China absolutely dominate the global graphite market. They 85% of the graphite market. Now, America's not introducing that to 2026. Now, I'm going to speculate here, But I genuinely believe the only reason that they've put that to 2026 simply because in North America, they don't have the supply and they don't have the processing capabilities. So they need to inject into graphite massively over the next 2 years before this 25% tariff comes into place. And if they did it now and it did shut off some of the supply, then they're causing their own problems. So no, it's an exciting commodity to be in. And we're now able to push this forward. And let's not forget the VMSs. We've put 6 holes in. We've discovered 2 VMSs in 2 separate areas. That's absolutely remarkable success. When we announced those, it was in a brutal market. It was in the very early Feb of 2023. The market's only just in the last 2 to 3 months shown any signs of recovery.
Yeah.
Under any normal circumstances, we would have been doing substantial drilling campaigns before now on those.
So they're on the cards as well then.
But yes, but we have to make sure as a business that we're in a market that's going to reward success. Unfortunately, there's been some really good news by companies over the last 2 years, but all that's generated is liquidity events. You can't build a business like that, and regardless of what investors or the market thinks, you cannot build an exploration company without the market rewarding the success that you're having. And I don't think it's any coincidence that since the market started turning ever so slightly in March, we've come off our lows. We were 2.6 to buy in March. We've raised today at 4.5. Not ideal, but that's okay. That's okay with what we know. The market hasn't rewarded the success that we've had, but we've managed it. We haven't fed the market, and I've told the market we're accelerating on what we're doing. Welcome to the junior resource sector. You want discoveries, you've got to put money into the ground.
Yeah, you do. Well, thank you very much, Darren, for giving us that update. Looking forward to talking about when you do need to get those boots on the ground and how that program is going, and then any other further plans for exploration, perhaps on the VMS side of things. But for now, thank you very much for your time.
Mark, I'm looking forward to this summer, and I'm looking forward to speaking to you regular.
Excellent.
Appreciate it.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.